Today we'll share with you a very accurate and profitable SMC Smart Money Concepts trading strategy that combines the order block, multiple time frame analysis, the inducement, imbalance, and liquidity. And this strategy works perfectly on Forex market, gold, silver, oil, and indexes. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. This strategy is based on 8 important steps. Step number 1. Identify the liquidity zones on a daily time frame. For this strategy, the liquidity zones will be the historically significant supply and demand zones, the zones that were important for the market in the past, and from where we saw significant bullish and bearish reactions. Here you can see the examples of liquidity zones on euro-yen pair. All these areas were important for the market in the past, and from all these areas we saw significant movements. Step number 2, wait for the test of one of the liquidity zones that you identified on a daily. When you're looking for the test of the liquidity zone, the price should strictly test the upper boundary of the supply zone or the lower boundary of the demand zone. Here we see the test of the lower boundary of our first demand zone. Traders, don't miss my next trading signal. Subscribe to my free Telegram channel now, the link in the description below. And here on pound-dollar pair is the example how the test of the upper boundary of the supply zone should look like. In step 3, multiple time frame analysis comes into play. You should look for an inducement on an hourly time frame. Here we can see the price action on a euro-yen pair on an hourly time frame after the test of a daily demand zone. And we can spot a perfect example of a potential inducement. With the bearish inducement, you can see that the price violated our liquidity zone, and with the inducement, the smart money make retail traders start selling. And here's how the bullish inducement looks. After the test of a daily supply zone on a pound-dollar pair, you can see that the price went higher on an hourly time frame, and we see the violation of our liquidity zone. Step number 4. After you identify the inducement, you should look for an imbalance. In order to confirm that a bearish violation of a demand zone on euro-yen pair was just a false violation, that it was a manipulation, we should look for a bullish imbalance, the sign of strength of the buyers and the sign of strength of the presence of smart money. You can see that after some consolidation, euro-yen formed a strong high momentum bullish candle, signifying that big players started to push the prices higher. And on a pound-dollar pair, after the bullish inducement, after the false violation of the liquidity zone, we see the bearish imbalance. Bearish imbalance confirms that that bullish movement here was the manipulation, and the real intention of smart money is to push the prices lower. Step number 5, look for an order block. Bullish imbalance after formation of a bearish inducement is the signal for us to buy. But we won't buy the market immediately. We will buy from the order block. And the order block will be the closest liquidity zone on an hourly time frame. That will be the area from where we will buy the market. And on a pound-dollar pair, after a bullish inducement and a bearish imbalance, we will short the market from the order block, from the closest liquidity zone. That area will be the area from where we will sell the pair. Step number 6. After you identify the inducement, the imbalance, the order block, you're ready to set your limit order. After you spotted an order block after formation of a bullish imbalance, you should set your buy limit order within the order block. And after you spotted the order block after formation of a bearish imbalance, set your sell limit order within the order block. Step 7. Choose the target. If you buy the market from the demand zone, your target for the trade will be the closest daily structure, horizontal or vertical one. Our closest structure on Euro-Yen pair is the falling trend line. That will be the goal for our trade. And shorting from the supply zone, your target will be the closest daily horizontal or vertical structure support. Step 8. Set the stop loss. If you buy the market from the demand zone, your stop loss should strictly lie below the bearish inducement. And if you sell from supply zone, your stop loss will lie above the bullish inducement. And in step 9, you should wait for the activation of your limit order and then you trade. Here's how the trading setup on Euro-Yen played out after the test of the order block. And here's how the price acted after the test of an order block on pound-dollar pair. Here the price dropped sharply and more than 100 pips were made. And here are some important trading tips for you. Planning your trade, make sure that you always have a positive reward to risk ratio. It means that the reward should be always bigger than the risk. I recommend at least 1.1 reward to risk ratio. For each trade, you should measure the lot size and make sure that you risk no more than 1% of your trading account. And if your limit order does not become active, but the price reached the target, you should cancel your order. Being applied properly, this strategy achieves 70% win rate. Let me know your in the comment section if you have any questions. Also, do not forget to subscribe to my free Telegram channel, the link in the description below. Follow the plan and good luck in your trading.